Welcome back. In our previous classes, we answered two important questions. First, what is a fund? And second, who are the people involved? Now we're ready for the next step. How does money actually move inside a fund? Don't worry about accounting entries yet. Today we're simply following the journey of money from the investor all the way through the fund and eventually back to the investor again. Let's quickly remind ourselves where we are in this series. We started by understanding what a fund is. Then we learned who the key parties are, like the investors, the general partner, the fund administrator, the bank, and the auditor. Today we're putting those people into action. We're going to see how money moves between them. Remember, our goal is understanding the business first. The accounting will come later. Let's start with the big picture. Every investment fund follows a very similar journey. Investors provide capital, the fund receives that money. The money is invested. Those investments either make or lose money, and eventually, any profits can be distributed back to investors. Everything we're going to discuss today is simply one continuous flow of money. The journey starts before any cash is received. An investor first agrees to invest in the fund. This agreement is called a capital commitment. For example, an investor may commit $1 million. But here's the important part. They don't transfer $1 million today. Instead, they sign the investment documents and promise to provide the money when the fund needs it. So remember this simple idea. A capital commitment is a promise. It is not cash. So when does the cash actually arrive? This is where the capital call comes in. Imagine our investor committed $1 million. The fund doesn't need all of that money immediately. Maybe the GP has found an investment opportunity that only requires $200,000. So the GP sends a capital call. Think of it as an official request asking the investor to transfer part of their commitment. The investor sends the $200,000. The remaining $800,000 is still available for future capital calls. So a capital call is simply the fund requesting part of the promised money. Now the fund finally has cash. This is where the GP begins doing their job. They decide where to invest the money. Depending on the strategy of the fund, that investment could be in companies, real estate, listed shares, bonds, or many other types of assets. Notice something important. The cash doesn't disappear. It simply changes form. Instead of holding cash, the fund now owns investments. Now we wait. Over time, those investments begin to perform. Hopefully, they increase in value. Sometimes they generate income like dividends, rental income, or interest. Sometimes they perform even better than expected. And sometimes they don't. That's investing. Not every investment makes money. Some investments increase in value without producing cash. Others generate actual cash through income. The goal is for those investments to create value for the investors. So what happens when the investment starts making money? Eventually, some of that value comes back to the fund. Maybe the investment is sold. Maybe rental income is received. Maybe dividends are paid. Or perhaps another event generates cash. When the fund has cash available, it can distribute some of it back to the investors. These payments are called distributions. So if capital calls move money into the fund, distributions move money back out to investors. Let's put the whole journey together. The investors make a capital commitment. The GP requests part of that money through a capital call. The fund receives the cash, the GP invests it. Those investments hopefully generate returns. Throughout this journey, the fund administrator records the transactions and prepares reports. The bank safeguards the assets, and the auditor independently reviews the financial statements. Everything we've discussed today is one complete journey. And now you understand something very important. Fund accounting isn't just about recording numbers. It's about recording every stage of this journey accurately. In our next lesson, we'll see exactly what the fund administrator is responsible for in practice.